Hey everyone, good morning. It is a good morning. Hope everyone's doing spectacular. I think we got the link sent out everywhere. Discord, Telegram. Yeah. Hey Abraham, if you could throw that link on Twitter for me, I'd appreciate that, brother. All right, 9:30 open here in about 30 seconds. So we'll do some light tape reading today. Not interested in pushing it myself today in my trading, so figured why not hang out on the YouTube. Olawale, good morning. Papa Vlad, what's going on, my man? Buenos dias. Christian Cadet, like, follow, and share. Appreciate that. Rich, greetings and salutations. Happy to see you, Rich. Frank, hello, hello. Denisha, good morning. Anita, Simon, hello. Looks like we got a full house. I think people like these AM session streams here. So let's go ahead and get down to business. Got the 9:30 open here now. So let's go ahead and get into it. James, hello. BF, hello, hello. Aslam, good morning. All right, make sure you guys can see me all right. All right, so let's drop down to the start with the daily chart. So you got a nice washout yesterday. So large range day, minimal expectations today because after large range day, typically the following day, day's AM session specifically can be a consolidation. So AM session, my expectations are limited today, which is why I'm hanging out here with you guys on the YouTube. So let's do some light tape reading today. Not a whole lot of expectations. It's Valentine's Day as well. Also have to get to work here on my raised garden, get my compost going and whatnot. So after the session, I'm going to be out for the day. So this is all you guys are getting from me today. So I'll hang out with you guys for the AM session. Again, do some tape reading and see what the markets provide this morning. So again, daily chart, we had a large range expansion lower, disrespecting these daily inefficiencies here on the downside. So that the blue rectangles, just so you don't lose your bearings in the lower time frames, those are daily inversion fair value gaps here that I'm referring to. So 4-hour chart, market yesterday attacking the equal lows, just a really nice delivery down into the sell side, just perfect. And then now we're just retracing back up into the range that we created here. So what I'm going to be interested to monitor moving forward on a longer term scale is how we trade at these key levels, right? Do we hit these levels, sell off, or do we just keep trading through them, right? So that's what I'm going to be monitoring from an order flow standpoint moving forward. All right, we'll jump right into our hourly. Like I said, just a beauty of a setup. Market maker sell model, second stage distribution, just absolutely beautiful price run into the sell stops, right? Easy money, easy to see this ahead of time, and just a nice, clean, straightforward setup. So that's what we were looking at yesterday. My team banked, Signals banked, everyone's banking off this move here. And even the students that weren't with me live are also taking that trade. So transferable skill set, and students are banking as well. So happy to see that. Happy to see that. Hourly chart, again, large range lower, and then we reach key levels. So it's reasonable to see the market retrace. And then also considering what we're retracing into, I'll cover that on a 15-minute chart. So we have buy stops here. Market trades up into those. So what we're looking at is, again, this range that we're trading in here. And remember, the blue blue rectangles are the daily fair value gaps. So that's what we traded into today, and that's what we've been consolidating in, that daily fair value gap. So looking at the bodies, respecting that, something that's interesting moving forward. And again, something I'm going to be monitoring here on NQ. But again, in the middle of the range, we already reached several targets. We had a large range day. So again, my expectations are minimal for the most part, right? Again, that's why we're hanging out on YouTube, again, as I said. So from the midnight open, market trades higher into the buy stops here for a nice London session run. And then we've just been in a consolidation since then. So what I'm being interested to see is what we do out of this consolidation. My expectations are minimal. Typically, almost every day, I have a draw on liquidity, right? I can say, okay, I want to see the market do this, and it should do this, but it should not do that. Today, I don't really have that, right? We're in the middle of the range. We've already hit targets. I smoked my weekly profit goals yesterday in a trade, so I'm just chilling. And like I said, we'll do some tape reading here. Looking at the regular trading hours gaps, which is what I was going to mention on the hourly chart. Here we have this gap in here. So where we tried to fill yesterday's regular trading hours gap, but stopping right there at that daily inversion, beautiful delivery. And then the market rolls over for the PM, but we have this gap here. So we have a gap above and below. We're in the middle of the range. So just a lot of uncertainty, right? So it could very well consolidate for the morning session. So being prepared for all those things in advance is very important, right? And then obviously, if we want to take a trade, we have to have a draw on liquidity, right? We have to know where the market's likely to draw to and why it should draw there. And again, just right now, I don't have that clarity, right? I don't have the clarity to say where the market's going to draw to. And that's fine because almost every single day I do, right? But there are times when I just need to wait for more information. And that's completely permissible. So let's drop into our 5-minute chart. So we swept the high end of the range. So markets traded higher into these relative equal highs. So there's buy stops there. Market traded up into that. And now it's showing a willingness to sell off. So do we make a run below these equal lows here and here? That's something I'll be studying. Again, nothing I'm putting live money on because if I really liked it, like I said, I'd be signaling right now. I would not be on YouTube. So do we make a run below these lows? That's what I'm favoring. As of right now, a gun to my head type situation. But from there, I wouldn't have much more visibility further than the regular trading hours gap. So what we can do is put quadrants on this gap here. So I called that sell side to you. So that's something, like I said, you're going to want to watch. Then we want to put quadrants on this. So that's the gap, and then we want to put these 4 quadrant levels on it because those are key levels that the algorithm is going to want to reprice into. And then if you do that on this previous regular trading hours gap, that's how I was able to know the market was going to likely turn there and rotate lower for the remainder of the day. All right, so keep in mind that regular trading hours gap, very important, even when I toggle electronic trading. Matthew just missed the longs off the open. I'm glad. I'm sure you are too now. And there's going to be that sell side that we called from up here. So nice delivery. Nice delivery. But again, just in a short range, right? So we take buy stops. If smart money's selling to those buy stops, they're going to reprice it below the sell stops. So we'll drop down into our lower time frame. Yeah, just really unclean market structure. Again, nothing I'd be interested in trading. Like I told you guys, gun to my head, these lows here and here is the draw. And we're about to smoke those lows. Why? Because I'm referencing the liquidity, right? I have to reference what liquidity has been taken, what liquidity is intact, who feels safe right now, and what sentiment are they going to want to run on, right? So that's how I'm constantly determining a narrative. James, hello from Kenya. Lionel, hello. Christian, hello. Christopher, been following you for a year now. Attended most Sunday outlooks. Really appreciate the value you've given us on the Signals Group, brother. Appreciate that, Christopher. Glad it's been helpful, my man. And we're just getting started. We're just getting started on Signals. Joe, what's up, my man? Good morning. Mohammed, good morning. Why are there gaps on your chart but not mine? I'm not really sure how to answer that question. So from when I called, when we were up here, and I called out these lows here and here, we traded into that fair value gap there, right? So it left the fair value gap, traded into that fair value gap, and there's the sell side. Boom. So that would be my trading day, right? I'd be packing everything up here, banking, and then going to enjoy my day, right? Life's too short to sit around and count money all day. All right, so there's the sell side liquidity as the doctor ordered. And through that, like I said, we have this gap here on regular trading. There's upper quadrant, beautiful delivery right there. Bam, put on regular trading hours. Upper quadrant, handsomely delivered. And now we have midpoint. So we'll see if the market wants to work towards that. If I was already in a setup from that fair value gap into the sell stops, again, as I called for you guys, I'd be taking partials here. A nice sell side liquidity pool here. Definitely be taking some off, putting it in the bank at this level, and then see if it wants to run to that midpoint. That's how I'd be trading it if I was watching this. Unicorn trader, how you doing, mate? Doing good. Just being the boring guy, right? The PowerPoints, meetings, YouTube, all that boring stuff. All right, let's go up to a higher time frame. Let me get this trading layout going. Cobra, nice little 550 bagged. Nice. Yeah, pretty easy, straightforward setup, right? Running into the sell stops. Matthew, I just saw the first part of your question. Why are you calling it lower? Well, I'm calling it lower because it's running for the sell side. Well, what told me on a 5-minute chart, Matthew, was that we took out the highs. But if you watched yesterday's market review, I taught you guys something else, right? That if the bodies stay below a key level here, the buy stops, market trades up into those buy stops. What are the bodies doing? It's unable to close above these highs here. So what's that indicating? That's just a run on stops. Equal highs, 930. That's going to be the manipulation move into the buy stops. Retail Rick, they're going long. Where's Retail Rick? Stop loss here or here. So they're going to run on that and attack these traders here. And then also considering that there's a gap here, it's going to want to reprice down into that gap. And that's what we're seeing. So algorithmic price delivery. But that was, again, just a scalp today because we're in the middle of the range. Not a whole lot of clarity. And again, just pay the trader aggressively. But again, even though I can see these targets, it's nothing that I have to trade, right? I can see setups all day long, right? I can, watch the market run from level to level. After yesterday's trading, I'm very happy with that. So just taking today easy. Listening to our marketing guy says, man, we got to get you on YouTube, brother. It's like, all right, man, let's make it happen. Let's get on the YouTube. All right, let's drop back down to our 1-minute chart. So looking at another thing, Matthew, that I'll cover. It looks like we were using the daily as inverse. Yeah, I'm not sure how you're coming to that conclusion, bro. But Momentum Trader, hello, my man. What's Dylan already banking mental capital? There you go, brother. Looking at this, Matthew is more about the narrative, right? It's not as much. Try to explain this in the clearest way possible. So like you thought it was using it for inverse higher, but you have to understand the market profile it's in, that it's consolidating, right? It's not really reaching for anything. So seeing how they took it higher at the open, it's only inverse when the narrative is aligned. Were you able to watch yesterday's market review, Matthew? So I don't have to re-explain a lot of the same things, just to make sure we're on the same page, that you're able to catch up there, and then I'll at least know you'll know most of what I'm talking about. Ali, almost been around 3 months away from you, Dylan. It's really nice to see you. Hope we would have a great year. Appreciate that, Ali. We will absolutely have a great year. Hope you as well, my man. Okay. So we saw this daily fair value gap and it was inversion to the tick, right? But look at the signatures around it, right? The bodies were stopping there. And then we hit the high end, but the narrative is bearish, right? There's a reason. That's why, when I'm in our signal group, or when I'm in sharing analysis to you guys in the private Discord, I'm calling the market lower to you guys, right? Because of these signatures. But the biggest factor was the drawn liquidity. What's the market reaching for, these lows? So when I'm calling these lows to you guys when we're up here yesterday, it's the fact that there's a drawn liquidity, right? I can see where that market's going. That daily fair value gap, as I taught you guys in gap theory, if it's below a gap, it's going to trade up, use it as resistance. And look at the signatures there. Look at the bodies respecting that. Now let's contrast it to what we're seeing here, where it's in a consolidation. It's just running both sides of the range, right? So because I understand it's likely going to be a seek and destroy profile, the market trades higher, sweeps the buy stops. Who's in profit? People that were going long. Retail Rick, they're buying at the open because it just took out their resistance on the move up. So what does that mean? It's time to do? Rake them across the coals and stop them out. And also the regular trading hours gap repricing macro, which is a specific time of day, which is that opening range. The market likes to work into that opening range gap. So with all that narrative now, does it make sense that we'd expect this to be inversion for value gap and active support? Not that it can't, right? Not to say that it can't just support here and just keep going higher. But in this move here, the narrative is the market's reaching for these stops here, and the regular trading gap. So with all that, I'm not going to expect this gap to be support, right? I want to see it get down below it. Here, use it as resistance and look at the midpoint, right? I'm discarding all this right here. I don't care about all this price action. Not that it's irrelevant, but I'm focused on time, then price. So price, which is the candlesticks, are going to be more of a factor when we reach a certain time of day. So it's almost like the best way I can represent this visually is from here back, I'm just looking at the liquidity points. I'm not looking at like support, resistance at key levels. I'm not looking at any of that. I'm just understanding that from here back, these are liquidity pools. And then there's a huge regular trading hours gap below us. So when they take it higher, first, they take the buy stops here, here, and here. So anyone that wanted to get long, they're stopped out, and their stop's going to be here, here, and here. So that's why I called those levels to you guys when we were all the way up here. What signatures do I teach you to look for if we're bearish? Daily fair value gap, it's going to do what? It's going to get down below it. Do we close below consequent encroachment? Yes. Is there a fair value gap? Does it trade up into consequent encroachment and use that perfectly as resistance, just as it's taught? Yes. So that midpoint facilitating the sell-off into the sell stops. But it's because the narrative as to where the market's running to, right? And only once you can qualify that, these things are going to work. So again, getting away from the more pattern type mindset where it has to be support. Really what you're trying to do is dissect the narrative, and that's going to be based off what liquidity is being referenced algorithmically. So if we reprice into the buy stops first at 9:30, look at the signatures around it. Did we close above? No. So that's telling me it's a run on stops. So that's all further confirmation for why we're going lower. And if we're going lower, this gap isn't going to be support. It's going to be resistance within that context of that price run. Hopefully that clears that up for you, Matthew. Jesm, good afternoon. With love from Europe. Appreciate it, Jesm. Hey, Matthew, if you can just shoot me a thumbs up, make sure I articulated that clear enough, just so that we're on the same page. So looking at dollar's in a consolidation after ripping higher into the premium targets. So really nice calls on dollar, and obviously conversely in euro. So we'll go up to our 15-minute chart. So with what we're seeing right now, after great learning on time distortion yesterday too. Awesome. Glad that was helpful. Yeah, when in my earlier days, or early on in my trading career, those were really the most difficult times for me as a trader. And we'll go back to that, because what are we doing here? We're just consolidating in that daily fair value gap, as I told you guys it would do. Why? Because we had a large range expansion yesterday. So the AM session is going to be muted, right? So if I'm expecting it to be muted, the market's going to do what? Run both sides of the range. So range extreme, it trades into that. So what's the algorithm going to reference? It's going to seek sell side now, because it's going to trade from range extreme to range extreme. And that's all we're doing here, which is why I called conservative price targets to the low here and the low here. And you notice I didn't call it to these equal lows down here. right? Not that it can't go there, right? Just saying because of the day, because of the market profile, it just makes me more cautious in terms of targets. But again, it looks like the group is still banking, even even on the little opening range call out. So that's cool. But back to what we were talking about here in terms of time distortion. Yeah, that was a great question you brought up, and that's helpful for a lot of people. You know, whenever the market is in time distortion like that, I would try to take entries or patterns, and then like I'd get stopped out, right? And then what I would do is I'd try to go back in and insist on getting that move or being a part of that next expansion. But then what I learned was I don't need to get in the consolidation. And that's why I don't trade consolidations, because it's just a lot more difficult to trade. So what I'll do is I'll say, all right, it's consolidating. If I get stopped out like once or twice, I'll say, okay, pump the brakes. Wait for the market to leave that consolidation. And I taught you guys what that looks like. And then I would trust my entries. So when I'm getting in right here, I'm getting in on the minute this market's starting to run. And this is right when I got in on my trade in the signal group. As soon as we leave that time distortion, I know it's game time. The algorithm's going to start running because of that specific signature right there. So I save myself the chop, our clients the chop, and then we wait for the signature that the algorithm's going to tip its hand that it's going to start moving. And then that's when we get in. And then the market starts running. But again, huge point there. So I'm glad you brought that up, Matthew. That's going to be helpful to a lot of people, my man. Trapping traders wanting to be part of a move like yesterday early on. Yeah, exactly, my man, trader. Matthew, after getting shit on NFP, I have been more scared to lose. How to deal with scar tissue for trading? I don't even trust. Yeah, I got you, man. That's definitely part of trading. You know, just those more difficult days. You know, one of the things about how do you deal with scar tissue for trading, I just say take my advice and don't build that scar tissue. Because man, once you get scar tissue, you start building fear in trading. You know, when you take real financial loss, it can become very difficult to overcome that. So that's why, you know, when I teach, it's with a very cautious approach, right? I try to be very, what's the word I'm looking for? Responsible with my influence, and, you know, be a voice of reason to help you guys out, right? So wanted to let you guys know that, you know, what days we want to push it, what days we don't want to. And non-farm payroll is a classic day that's going to present those difficulties that then we can carry forward. So, you know, one of the things I would say would be avoid it, because another thing, I was having a conversation with some of my clients yesterday, and, you know, there was fear around the PM session being a consolidation, right? So it was like, well, I was afraid the PM session was going to consolidate and it wasn't going to move. And then the reason was because he was trading a lot in months of like December, January, days with no news, and he's expecting a move, but it's more likely to consolidate on those days. So what he would do is build that scar tissue, build that concern and fear of getting trapped in consolidation, and then bring that in the good days. Like right now, we're in February. We're in a time where the market's a lot more liquid to move around. But bringing the scar tissue in from those poor days is what's now affecting. It's like a hindrance to him moving forward, even on a good day. So again, by not building that scar tissue, by doing the right things, you know, again, as I'm guiding you guys and coaching you guys, that's really going to help you guys moving forward. So definitely something to be conscious of, Matthew. And the big thing is, you know, that you're learning, my man. So glad to see that, brother. Dealing with the repercussions still. Yeah. Sometimes it sucks, man. Sometimes it sucks, especially if you know, do some serious financial harm, you know, to yourself. And you just have to work your way out of it. You know, Easier said than done, though, because I've been there, Matthew. I've been there, my man. But best thing to do, just take it easy. Take a few days off and let the mind rest, because mental capital is something that's even more expensive than real capital. You can refund another account, but man, you can't fix your mind after you've done serious damage to it psychologically in trading, because this is something that will drain you mentally, emotionally, everything. If you allow it to drain you. High speed trading, bank my 1% for the day, pay the trader. My man. There you go, Mel. Which inversion fair value gap were you using for your setup, Mel? Joe, most definitely you do, Dylan. Appreciate that, Joe. Is the SMT on the 15-minute time frame valid? Yeah, let me go to my trading layout. So working the high end of that daily fair value gap, retracing deeply into that range. And now the market's working it's way lower. So again, having in mind the gap and then the 50% levels, that's likely where the market's going to want to reprice into. So that'd be that level right there. So if we remain below that fair value gap here, and this daily right up here will likely make a run for the, what are the ranges looking like? That's just a 28-point runs. Yeah, that's why I wasn't even really too interested in trading today, because the ranges are so small. It's like a 30-40 point range. I'm okay with trading small ranges if that's all we have, but why Mickey Mouse around for 20-30 handles when you can hold on, when you can trade a day that's moving hundreds of handles, right? But that's my take on it. That's why I'm not terribly interested in today's trading. If you look at it, what have we done, other than just chop traders up that don't know what they're looking for? So unless you're surgical, right, you can get in and out, what you're looking for, then you can trade it, obviously. But if you're trying to hold for a big breakaway move today, good luck. You're going to need it. High speed 5-minute candle, 925. Nice. Okay, so you waited for the closure below that to bank your to get in your short. Good stuff, Mel. Asian lows looking juicy, but also yesterday's news high, would you say it's 50-50? Yeah, I already covered that. Only sim going forward. There you go, Matthew. Day by day, brother. When it's time for you to go to, I forgot what institution it is. I remember you say you're going to a prop firm, I believe. Well, man, instead of you taking notes at the internship, they're gonna be taking notes from you, Matthew. Got in a bit early because of momentum of the candle. Got you. Nice, Mel. Good stuff. Hey, Dylan, why do you think that Top Step is the better futures prop firm than others? Top Step's good. Top Step's solid. I like Top Step. They're one of the more reputable ones. Top Step and My Funded Futures are really good. Those are the both solid ones. I only have a affiliate link for Top Step. I don't even know where that's at. I don't even think I have that link up anymore. But yeah, we have a link for Top Step that if you want to use that, it gives you a discount unless they already have a promo running, which they typically do. But still, using the link helps a brother out. But those are both solid ones. My Funded Futures, Top Step are both good. Matthew Davis, no, for real, they make 300K a year trading patterns. Yeah, like at the fun level, like they trade some goofy ass stuff, and when you show up there, with your logic, Matthew, you're gonna be running circles around those guys. Awesome to see. Any difference trading equities with SMC? Same thing, brother. Same thing. If we go to again, snooze fest, guys, so you're not missing much. Let's go to a big mover. Let's spend a big mover. What do we see in Tesla? Yeah, we'll look at Tesla. It's the same logic, brother. So looking at Tesla for stocks, 930. What's gonna be the first move? That's gonna be the fake run, right? And then what's it gonna do after that fake run? Reprice into the gap. So just right there, man, that's bread and butter. And you're smoking those guys' results. And that's just something you can backtest. It's every single day, right? We open lower with the gap, market trades higher. I mean, obviously there has to be more narrative, around it and why, we're looking at these things based off top-down analysis, as I've taught you guys. But man, it's all doing the same things. It's just going to be like you're trading S&P and NASDAQ with regular trading hours gap on. That's it. But it's still doing the same exact things. Your silver bullets are going to be there. Your 930 Judah swing is going to be there. Your regular trading hours gap repricing is going to be there. And all that even applies to stocks as well. So S&P just chopping, right? So isn't it cool? Isn't that reassuring that like we came on here and like we're able to predict this? Because a year and a half ago, I never thought this level of precision was possible. You may not see it as precision because you want me to call targets, but calling a market sideways is just as impressive as calling targets up or down. And so answer that question, Matthew. Yeah. So yeah, you'll be you'll be plenty prepared for trading stocks. Funding pip have some issues. I have no idea what that is. Isn't FTMO better than they're two different companies, Andres? So FTMO they're a CFD forex company, whereas the other ones are futures. The drawdown is better in the CFD though, like, absolutely. But I don't like trading CFDs. CFDs are, I trade them, right? Because again, just the access to the capital. But CFDs are so garbage in my opinion. And you just have to trade them a specific way. Just because the stop loss, the way, just the spread, just everything about it, I don't like. But again, I still trade them myself, so they're not bad as long as you know what you're doing. Can you take a look at ES? Is it me or you stop trading ES? No, I still look at ES. I still trade it. But just not interested in these types of ranges here. There you go, Andres. Yeah, that's the right way to do it. You definitely want to chart futures, and then you can trade the CFDs. Yeah, absolutely. Tyler, Matthew, hire me when you become a fund manager. Yeah, Matthew Davis, fund manager. I see it. Christian, Dylan, I have a question. We're actually trading above midnight open all day. Is it therefore likely that the market will trade lower regarding R3? Yes, it doesn't need to use midnight open. Like if we're not trading near it, it's just not a factor in my analysis. I'd use another opening price, like 9:30 or 8:30 open. 1 second. Man, nice day out. So at 11, I'm gonna get going here. And there's a few more questions. Cobra, long range London session. Yeah. Yeah, that's why I'm not really terribly interested in pushing it today, and why I'll just trade tomorrow, right? Because we have high impact news at 8:30. There's no news today. There was high impact news yesterday. We banked. Why, open myself up to risk on a day like today, right? There's just no point. So that's why I'm just chilling here today and hanging out with you guys. CFDs are unregulated. Yeah. Christian Cadet, appreciate the support, my man. It means a lot, brother. And big things for you going forward, my man. Happy to see your progress. Appreciate you sharing it. Keep killing it. Hopefully, you've been able to figure out. The trade of 8. Ghost in the Machine. What was your trade yesterday? PM session shorts. Man, the action hounds, man, they're hating life today. They're hating life today, especially in the seek and destroy profile. But I think someone anticipated that. I don't remember. Maybe. Just having fun on YouTube with you guys. So we'll take a look at dollar. I wanted to share some things. So now that we've seen the opening range, we've seen the first 30 minutes on a sloppy day. What I would do is I'd let the opening range typically pass. Let retail Rick get chopped up gambling at the open. And then what I'd wait for is some type of algorithmic signature going into macro windows, right? That we're seeing support within key levels, markets starting to spool, run to specific price runs, or starting to manifest specific price runs. And then I would express interest in trading it. So that's how I trade like a difficult day like this. But again, when you're taking down clips like I am on a day like yesterday, it's just why even open yourself up to risk on something like this? What I say I was gonna look at dollar. Let's take a look at. I want a different layout. For some reason, it's weird. I have to have the Google Chrome version of TradingView on this. So hold on, let me see if I can pull that out. Yeah, there you go, Christian. Yeah, that's the easiest way to do it. That's why I like Tradeify, because you can just trade directly through TradingView. All right, let me pull up my dollar loadout. Vlad, can you explain again why it's a no trading day? So, I mean, it's not a no trading day for me. People can trade that. I mean, there's markets printing candles, but it's just not a trading day for me. Reason being, as I already mentioned, one sec, let me just lay out. It's day after a large range day. There's no news today. So typically the day after we see a large range day, we see an AM session consolidation. So signals group, that's why I put in the schedule, likely PM session focus today, because I'm anticipating this. So the economic calendar, it's like the TV guide. It tells me when the market's going to do what and how I know to expect it, because it's all rigged. It's all scripted, right? It's all delivering based off time and price. So if we see this yesterday, it's easy to predict the market morning's going to consolidate. Right? That's how we're expecting the seek and destroy profile. So I was able to call the short setup after we took the stops, because in consolidation, it's just going to revert to range extremes and keep gyrating between that. So I'm able to predict that because of my understanding of market profiles, not market profile like the gimmicky indicator, but market profile in terms of the schematic of how the market's delivering. So understanding that, that's what told me the AM session was going to be difficult. And again, not to say it can't run, but it's just going to be a more difficult AM session. And I also told you guys what to wait for, right? Let the first 30 minutes pass. And then within a key time window, we want to see is the market showing signatures that it's showing a willingness to run. And that's what I'm seeing here, right? With fair value gap, trading into that, finding support here, getting above the daily fair value gap, trading down, using it as support here. Now the market's running. So this is a lot cleaner price action, cleaner delivery. So we're likely to make a run above this high here. And then on the upside, above that high, look at the regular trading hours gap from the day before, right? So the way I'm looking and internalizing this price action from here to here, this is all void of liquidity, right? There's no candles that have been printed here. So it's a real liquidity void. So the market's going to want to trade up into that. So the market tried to trade down to the regular trading hours gap of the present day, but it was unable to. And look at the bodies respecting the daily fair value gap. So now in a lower time frame, we're seeing that bullish institutional order flow, finding support at the key levels we'd expect, right? Constant encouragement, fair value gap. First run after 9:30 is typically going to be that fake run, the Judas swing, and then we're going to see the market rip above this high here. And then how high above that can we go? We can trade into this gap that I highlighted on the 5-minute chart. So let me put a buy sign. Gerald hey brother, is the office at St. Pete open to the public? Yeah, so that's just that's just our registered agent's address. Obviously not putting a physical address. No, we don't have a physical office. We're just completely online. Everything's done virtually. So we don't have a physical office. That's just our registered agent. Maybe in the future we'll have an office, but I doubt it. I don't like going to the office. I'd rather work from home. All right, 15 minutes. I was actually going to talk about dollar. So that's just my expectations, right? That's what I'm looking for. But again, under the context of a sloppy day. So if it doesn't deliver, again, don't shoot the messenger. All right, looking at this daily chart, absolutely smoking it on dollar index. So again, last week when we were in this consolidation, I told you guys the market's going to want to reach for the buy stops here and here, beautifully digging into that, and the market went into consolidation. Then telling you guys that, yeah, yeah. So looking at the daily chart, what I left you guys off with on Sunday, I remember we're calling higher prices on dollar, right? So seeing that weakness in indices is to be expected, right? A nice run higher on dollar, which is what also gave me further confidence to look to short short indices yesterday. So right now we're just consolidating in dollar. But yesterday, I was looking for the market to expand higher on CPI. So again, it's just really one of those like show me the charts, tell you the news type of things, because obviously the news is all fake. We should all know that. But understanding it from the perspective that what the chart is telling me, that's how they're going to reflect the news, right? So when they say CPI, it came out, red hot or hotter than expected, just all the narratives that they push out. I was already anticipating those narratives that they're going to push out in the mainstream, just be simply because of the price action, right? I've even been bringing out the big guns for you guys. Last year I didn't cover seasonal tendencies, COTs, how we use that, but this year again I told you guys I'd start, giving you guys more detailed analysis. But there's a lot of things that support this, right? COT data is bullish, seasonal tendencies bullish, and the market structure and institutional order flow is bullish. The last has to be there for the first two to even be considered, right? The first two are just tools. But we have the buy side here in this huge inefficiency, right? So you guys market's going to want to reprice into that. And the market goes from consolidation to expansion, right? So it doesn't go consolidation reversal or consolidation retracement. It's going to go from consolidation, expansion, consolidation, expansion. So also understanding price delivery. That's how market delivers. So it only has a few options to go through. So that gives you clarity in terms of what the market can do. Not that it has to do that, right? Manual intervention can come in and the market can just do whatever, especially if things start to rev up on the geopolitical end. But considering that we've been looking for higher prices into the buy side here and here, we took out previous week's high in the daily fair value gap. It's a beautiful delivery. So what I'd be looking for on the upside would be the dollar midpoint. Now let's look at some other things that told me why dollar was going higher. Give you guys a little PhD level YouTube stream here. So what else told me dollar was going higher? We have T-bonds selling off. Remember I told you guys that if we're going to see weakness in dollar, what are T-bonds going to do? Act as or sell off. So what I say this weekly inversion fair value gap was going to be from weeks ago. Right? It's going to be resistance. Oh, shit. It's going to be resistance, right? Just look how we hit that on the high end. Look at that market work in that level. Look at these fair value gaps here. When the market's trading up here, I told you guys if the market's going here and here, it's going to use these fair value gaps as what inversion does it. Absolutely. Market sells off for the sell side here and here. And then we have that weekly fair value gap. That was another target. So how'd you know dollar was going to expand higher? That's what I'm teaching. And then if we look at the yields, remember I covered that SMT there where 10-year did not make a lower low. 30-year yield did not, but the 5-year yield did. So that's a cracking correlation on the triads. So when I see that SMT, that qualifies this run here as a turtle soup, fake run on the stops. And then what are the signatures around a turtle soup? It's going to reprice aggressively away and start showing bullish institutional order flow, and that's what we're seeing. So all these factors come together, and here we are calling higher dollar. And that's what, again, gave me the confidence to see onto a 4-hour chart. And then again, that's what further gave me the confidence to look for lower prices on indices. So see how all this just comes together, right? It's just like a Swiss timepiece. Everything has a function. Everything makes sense when you understand the entire bigger picture. So we'll go back down to our lower time frames. So it didn't miss much, right? High resistance delivery, right? Is it still going to deliver to the targets? I would assume, right? As long as we stay above this candle's low here, I'd be looking at higher prices. But look at the delivery, right? Look at the deep retracements, deep retracements. In low resistance, the market would already be up here. Would have been up here several candles ago. And that's why I don't like to trade these conditions, right? I don't like to signal in these conditions because I don't like to trade. Matthew LML, bro, searching up his LLC Corp online. That's funny. Yeah, does that make sense, Papa Vlad? Why we weren't looking for the why we weren't looking for big range expansion this morning? And again, you know, what has the market done since open? Just frustrate traders that are trying to push it in a day where it's not really going to do anything. All right, so as many as you guys know, with my trading style, what I like to look for is the hourly candle, and I like to anticipate that range expansion, right? Where's that hourly candle going, higher or lower? What's the drawn liquidity for the hourly candle? I don't know, right? I can justify it higher or lower, so that automatically equates to what? Low probability, right? So understanding again how to avoid these conditions, not trade them, and anticipate them, right? Not have to blow an account and then realize, well, it's probably not a good day to be trading, right? No risk is a good day. And then again, just working that daily fair value gap. Yeah. Earl, I see your question on Discord. I'll go ahead and get back to you on that one on a video. I'll record a short video and I'll send that to you because that's a good question and everyone would be able to get value from the answer on that one. It's good stuff. There you go, Papa Vlad, Jonathan, banking in the group. There you go. Jonathan, interested to hear. Did you see that yourself, or were you hanging out with us on stream? I guess if you're not hanging out with us on stream, I guess we won't see your message. But, good stuff. Good execution there, Jonathan. Banking the partials. Papa Vlad, I see. I see you said you're traded, my man, and then you came in and asked me on here about the why it's not a good trade. I got you, but you know, paying the trader is huge. So it looks like you're able to pay the trader, which is the most important thing, especially on a day like today. Especially on a day like today. Cobra down, not making higher highs like the rest. Yeah, it's decoupled across the board. Decoupled across the board. I see all indices on one monitor, and Dow is not joining the party higher, so that is going to make it more difficult as well. Andreas banked 1% on that NQ. There you go. Matthew Davis Dillon, would you ever work for a legit prop firm somewhere? No. Nobody could pay me enough to work for them. My time, my freedom is more valuable than any amount of dollar bills somebody can give me. especially with the skill set. There's fresh bread every day. I'm what you'd call unemployable. Matthew Davis become the interbank trader. Yeah. But if that's your aspiration to run a fund or work for a fund, that's definitely all possible with the skill set. There's people left and right that are looking to offer what's it called, that are looking to offer capital to people that know how to trade. Like if you know how to trade and you prove it, there's a lot of people that would be willing to offer you their money to speculate for them. There's a huge, huge market for that. There's a lot of people with a lot of money that need people to put it to work, right? And then when you understand that, there's a lot of opportunity in this, and you can start getting into fund management and all those types of things. But great questions. Nasdaq making head and shoulders on the M1. Yeah, I don't know what it's doing, but I sure do know it's running for those buy stops, just as the doctor ordered, right? Staying above what low? This low, right? As I told you guys, it can go higher, it can retrace, but it has to stay what below this low, or above this low, excuse me, and it has to stay above constant encroachment. Did it respect those levels? Right? It's almost like this thing's coded. Stays above those key levels, makes a mad dash for the buy stops from the 1 minute fair value gap, finding support at constant encroachment of that daily fair value gap, right? So it's dynamic support and resistance. Here it's resistance when the narrative is what? It's running lower. When the logic is that it's bullish, it should expand higher. Market's doing what? It's finding support at these levels. Is it respecting the levels I say? Yeah. Is it running to the buy stops? Yes. Is it running to the liquidity void that I shared that the algorithm would want to reprice up into? Absolutely. So above that, what I'd be looking for is just the midpoint of that level. So animation through that takes into the midpoint. If I was trading that setup that I called live to you guys here, I would be banked out of partials here. I'd still have something running to see if it wants to snatch up into that midpoint, but I'd be just content with that, especially on a day like today. Right, so outlining how the morning's going to be difficult. What do we wait for? A specific time of day? What would that be? Macro window. Is the market starting to show favorable signatures to run? Yes. Right, fair value gap here, support here, support. Outlining all this to you guys real time, and then the buy stops here, qualifying this as the fake run before the true move at 9:30. Right, so it's all time then price. And one of the other things that made me like this setup as well is the market symmetry. So let me see if I can pull up my other template. See, so ES higher, NASDAQ higher, Dow was dropping. Hold on, let me make sure. Right, so now that we have Dow joining the party and rallying as well, that's going to make it a lot easier for NASDAQ and S&P to rally. Denisha, don't forgive the stream a like. Yeah, please do. Please do. If you guys get some value from what we're doing here, you want me to go on YouTube live more often, help a brother out, hit that like button. Yeah, so I get a lot of the same questions, the things I've already covered, like when it's going to be a sloppy session, what the green box is. So just so you guys know, the recording's always up, right? Just so I don't have to repeat myself 15 times for everyone that's coming in and out or just not paying attention. So the recording's always going to be up for you guys to look at and refer to. I don't ever delete any streams. Right. So ES reaching higher in its respective liquidity void. So again, through that, we have this liquidity void again on the regular trading gap here on the 5-minute. So that midpoint would be a nice next target. And if we start displacing through that, then that would even give further confirmation to potentially reprice to the high end. So just something to consider from an order flow standpoint. Andreas closed all longs on NQ. Nice. So market digging down into a fair value gap when again the order flow is bullish. So just looking for an expansion into that midpoint there at the 17,856 and 3/4 level. And then we have the buy side here above that 830 high. There's going to be buy stops up there. The market's likely going to want to dig up into. So getting above the midpoint here of that regular trading hours gap, that would likely be the next draw. But if this was a day again I was trading, I would be partialed out. At least 50% of the position and then leaving the rest to run just because of the day. S&P running nicely. Into its respective gap here. Large void here. The market's going to want to dig up into. Market tried to fill the present gap that we opened today. Found support, which is what we expect if we're bullish. Market gives that support. Yeah. Mid gap, got it. Okay, there you go, Aaron. Hey, bro, what's your view on the S&P on the monthly chart? Macro perspective is still iffy on me for me right now. So for macro perspective, we're gonna keep the cards close to my vest until we get more decisiveness. So for right now, with where we're at on like a higher time frame, just looking at a 4-hour chart, I want to wait for more information, right? Because I don't want to be the guy calling the top, right? That's not what I want to do, right? Are we seeing signatures that the market's wanting to break down? Yeah, one could argue that, but I don't want to be the one trying to call a top. I'll just wait for the market to decisively show me it's weak. So that's what I'm doing on the higher time frames. But as you can see, I don't even need a daily bias to trade, right? You can just understand internal liquidity, what the market's doing internally, and that's all you need for setups. So you don't need a daily bias. Obviously, if you have daily bias, it'll make your trading a whole hell of a lot easier, knowing where the higher time frame, weekly, daily is reaching for. But when it's a situation like this, I don't even know where the monthly, weekly candlestick is going with a great deal of assurity, right? I can have an idea or what I want to see it do, but I don't have that crystal clear clarity on those time frames. But again, I don't need it, right? As an intraday trader, I can do very well with just trading the intraday volatility to price levels that make sense. How do you mentally grow with desensitizing yourself to larger P&Ls and using large capital? Yeah, so that takes an adjustment period. Obviously, the big thing is knowing what you're doing, right? And obviously that seems like a no-brainer, but a lot of us actually do start trading before we have any idea what we're doing. And if you try to move too quick into large capital before you really have a grip on, being an established trader, knowing what you're doing with a little bit of capital, it's going to be very difficult, right? So the best thing to do is, number one, obviously learn how to trade, right? Learn what you're looking for, what the markets are doing, and not just cowboying it. Like, you have to know, again, why you're looking for what you're looking for, right? And then that confidence in what you're looking for will then allow you to take bigger bets on, what it is that you're looking for, and risk more capital. So one of the things that will help with that is, again, number one, learning how to read price action the right way. And then from there, just growing, right? Getting consistent in demo, getting consistent with a micro, 2 micros, 3 micros, a mini, 2 minis, 3 minis, and then just growing in a proportional, sustainable way that makes sense, right? So let's say it takes you 6 months or, a year to grow up to trading, 10 minis. It may take that long, but, once you get to that point, you're gonna be glad you got there, right? But, to get to that point, you have to, again, know what you're looking for and have the money be secondary. Because if you're trading your P&L, which a lot of people do, right? A lot of people just watch their profit and loss and they manage their trade based off what their profit and loss is saying. When you get to that point of managing more capital, the priority doesn't become focusing on the profit and loss. It's actually excellence in execution, which is what I teach you guys, right? Not focusing on the money or the P&L during a trade, but focused on excellence in your execution. So what does that mean? That means that instead of watching the P&L tick up and down and, having your ass puckered, it's best to focus on what the market's doing. What's the logic of the marketplace? Why should it do these things? For example, like holding yesterday's trade. I think it did like a 60-point retracement before continuing lower on the PM session, right? That dropped lower, stopped just short of the lows, retrace, and kept dropping. Someone may see that and say, wow, all that 60-point retracement, that's so much, but somebody that's taken down large pulls that you're taking down hundreds of points, you're not worried about a little 60-point retracement because you're taking down bigger hauls. But why is that a problem? Because they're focused on the money, right? They're focused on the P&L of what the market's doing, as instead of focusing on excellence and execution, which is what's the logic say that I teach you guys? The low of the day is going to be made at a very specific time of day. So you just trust the order flow, you trust your models until that time of day. So you're focused more on the execution and you're not even considering the profit loss. Because if you focus on excellence in your execution, the profit and loss works itself out at the end of the day, at the end of the week, and at the end of the month. So by just having, again, a focus on doing the right things, building good habits, that's eventually going to translate into being a larger trader, right? Because if you take bad habits into large trading, it's going to be very difficult, right? Because you're just going to compound the stress, the anxiety of, what this business is, and you don't want to feel like you're puking up your guts while you're trying to trade. That's no fun. Andreas, how do I stop myself from taking partials and closing trades too fast? Just holding, right? Taking partials, letting some run a little more, and just growing incrementally. A great question though, Matthew. And the other thing, Andres, is knowing what you're looking for, right? If you know what you're looking for, why you're looking for it, it's going to give you more confidence to hold. So that all goes back to knowing how to read price action, learning from somebody that's able to teach you, what to look for, how to grow, and how to navigate, the business of trading. High speed trading, my past life. There you go, man. Just like we were talking about on Zoom now. If we don't look back at our old self, in disgust, are we really even growing? Islam, after studying core content in 2022 mentorship, you think as a new trader, you need to study 2023 and charter pattern? It depends on how good you understand the core content in 2022. If you understand it really well, then 2023 is really going to help you. And yeah, just study at your own pace. If you understand 2022 and core content real well, then I think 2023 would absolutely be a benefit. And if you want to keep studying, then he has a wide library of content to go through. But that's how I'd recommend learning it. If I had to go back through and learn from ICT's YouTube channel. Yeah, Andres, I'm not going to give you any financial advice, brother. That's all you, my man. That is all you. Especially not on YouTube. I don't want to get myself in any legal trouble. But the interesting thing is people from other parts of the world don't really understand that, because I'm not saying you're from another part of the world, Andres. I just understand that because it's a global community. Like, what do you mean legal trouble? A lot of you guys don't understand that the CFTC, man, they are not fucking around. They are serious. So if you mess around, Mickey Mouse around, give financial advice, tell people to buy and sell, and somebody, comes after your ass or sues you, you get serious problems. They are not an agency that messes around here in the U.S. So I don't give financial advice. Everything I'm saying, again, is just talking about candlesticks. And, if you hear a signal, then, you're hearing that, on your own accord. So that's how I have to operate. That's what protects me and keeps me safe. Because in the world, society today, yeah, you can't be careful enough. Yeah. But I'm still submitting to the idea that I want to see the market reprice higher, right? So I'm looking at this as a retracement to go higher. But under the context, as I told you guys, if I'm going long from down here, which is when I'm telling you the market's going higher, right? Not talking to you guys, telling you after the fact. When I'm telling you it's going higher, I would already be scaled out a good amount here, as I was saying, right? So saying I'd be out over 50% here if I was trading, right? Why? Because it's a difficult day. So if it doesn't get to this midpoint here, I'm still a paid man, right? I'm getting paid for my time, my effort by taking partials. And then if it does roll on the stop would be near break even, then it takes me out. So that's how I'd be trading it, right? And I like that because I can be wrong and still make money. Cobra, it's all just your opinion. Exactly. But good thing is, we're not that big of a community yet in terms of like tens of thousands of people. So I'm not that big of a fish to fry. But man, if you're a big enough fish to fry, they will fry your ass. And you just got to be careful. All right, guys. So 10:38. Hang out with you guys here a few more minutes, and I'm gonna get going. I'm gonna go throw some iron around in the gym, and like I said, gotta get to work here on my raised garden. So beautiful day in sunny Florida. And then I'll get back to work tomorrow. So, mentorship students, this will be today's video for today. Quite a few things to come through and study, but not going to do any type of review, not expecting a whole lot in today's delivery. So we'll pick back up tomorrow. We'll have our teaching on the remainder of the PD arrays. The PDF on order blocks will be out soon. Signal students, I'll send this as well in the announcements. You don't have to worry about getting the information here. We will be no signaling this afternoon. I'll go ahead and give you guys the day off, right? We worked through it hard yesterday, worked through both sessions, so I'll let you guys have the day off today, and we'll get back to work tomorrow at 8:30 for the high impact news drivers. So that's the schedule for the week. That's what I'm doing, and I'll sit with you guys here till about 11. Jay, have a good workout. Appreciate it. Expansive nature. Do you live stream yourself trading? I do. Yes, I trade live in my Signal group, live trading room. Almost about 4 days a week. We're live trading. Mel, enjoy your day. Appreciate you, brother. Appreciate you, Mel. Have a good rest of your day, my man. Take care. Fabrice. Fabrice is in here every live stream asking about signals results. It's about 1,000 R, brother. So Dow is not agreeing with the other indices and making a higher high. So we're seeing ES and Q making new high of day, and we're seeing Dow is unable to make that higher high. So that's something notable to watch. Eslam, thanks for the info today. Dylan, enjoy your workout. Appreciate that. You take care as well. Eslam, appreciate you joining us. And again, if you did get some value here, help me out, hit that like button, and may entice me to do more of these with you guys. All right, take care, Denisha. Appreciate you joining us. Have a great rest of your day and take it easy. May. Happy Valentine's Day to our trading fam. Reese, what's so funny about my name? Nothing's funny about your name, brother. Just the question, man. Just the question. Chris, for how long trading? 4 years. 4 years in the lion's den. First couple years was, but then the way trading works is you either die a prey or you live long enough to become the predator. And I'll leave that up to you guys to determine where I'm at now. Dylan, if you need any info on gardening, let me know. Yeah, reach out, Wasim. If you could hit me up on Twitter, man, I'd love to chat. Definitely. I don't even know if Twitter lets people DM me because I'm verified on Twitter. If not, hit me up on Instagram and we'll get in touch. Yeah, appreciate it, Wasim. Yeah, definitely. We'll get in touch. See you, Tyler. Take care, brother. All right, guys. Yeah, this is a snooze fest. This is really boring for me. I don't really like to trade in days like this. We'll go back up to that hourly chart, and it's just really bad, right? Not to say the market can't move, and not to say it's not going to, but now you guys can see why I wasn't really interested in trading today. I can still see setups. I can see price runs, but it doesn't always mean that constitutes a setup for me. Jay, as per the weekly profile, you're expecting Tuesday low of week, reached weekly busy. It could be that, or it could be Monday high of week as well. That's another possibility I'm considering. Just Monday high of week, sell off the remainder of the week. That's something I'm interested in because look at where we're at on a higher time frame. So this is why if I was going long, it wouldn't really be that high leverage of a long because the animation now is on the downside to me. I'm seeing all these runs higher here. Let me put this on the full screen. It's just like anemic run on the highs. That's not really displacing through. And then we just got aggressive washout. So if we go back up to our 4-hour chart, all we're doing is trading up into a short-term premium of this range here. So I don't really like to buy premium. That's why if I was going long in this daily fair value gap, I'd have to be aggressively partial down here. Right? So is this setting up a retracement to premium to keep rotating lower after these equal lows here, and here? Maybe. That's what I'm favoring. And we may be taking some swing setups in that direction because we have that confirmation with dollar. But again, just something to consider. That's what I'm looking at. That's what I'm weighing out. I want to see how we trade inside this hourly fair value gap. And if we're showing these weakness signatures like we're seeing here, unable to get above it, then look at the respect of that daily fair value gap there. Look at the bodies. Beautiful delivery. So if we start to get a sell-off from here, we'll likely make a run for these equal lows here. And then further down, we have sell side here, equal lows. So if they start to accelerate this thing on the downside, it's going to be a waterfall. And I'm here. I'm all for it because I'm going to be milking it every step of the way. So that's what I'm looking at. That's what I'm weighing out moving forward. So that's kind of the bias on indices. That's the update. Dollar, everything I've been saying the past 3 weeks still is a green light. We're still looking for higher prices. And yeah, I think that's all for today. James, if there's a big fair value gap, what level is best for entries using the quadrant levels? That depends on a lot of factors, James. It depends on if it's going to be institutional order flow entry drill, if it's going to trade to midpoint. Those are all things to determine, but it's all time and price. Is what's going to tell you what levels to use. What time of day are we trading, and what price are we at? And that's what tells me what levels to use. So I'm never having to second guess, well, what levels am I trading with today? I just have to see where we're at when we open. And then you guys can see the daily fair value gap, right? This daily fair value gap here wasn't even consideration. We're just using this one. And look at how the market keyed off it several times, right? Resistance when it's bearish, support when it's bullish. And then again, emphasizing how important partials are as we trade above these highs here. Dig deeper above that, partials aggressively. So if it did roll in the stop at break even, well, then that's the trade. Cobra, so do you say no PM trading today? Yeah, well, I originally had on the schedule to work with the Signal group this afternoon. But because of where we're at, because of other obligations that I have to get to, I will not be signaling this afternoon. So we'll get back to work tomorrow morning for the 8:30 news embargo. All right, guys, I think that's going to do it here. Hope you guys have a lovely rest of your day. Stay safe. Don't get chopped up. And as always, good luck and good trading. Take care, everyone.